Welcome to session number 4 of the Geometric Trading course, Apprentice Level 2. This is Ross Beck. We're going to be talking about the real foundation of geometric trading. It's related to chart scaling. What do we mean by charts and what do we mean by scaling? Well, a price chart is a sequence of prices plotted over a specific time frame. In statistical terms, charts are referred to as time series plots. On the right side of the chart, we have the y-axis, or the price scale over here. And on the bottom of the chart, we have the x-axis, which is the time scale. Let's first focus on this right side of the chart, the y-axis, the price scale. Charts are created with two different types of vertical price scales. They are arithmetic or linear, and the second type is logarithmic. Let's first focus on linear or arithmetic scaling of the price. With a linear scale, all values in the graph are evenly spaced across the y-axis. An arithmetic scale or linear scale evenly spaces price along the right side of the chart. So an arithmetic chart space between $10 and $20 is half as tall as the spacing between $20 and $40. All right, so let's move on from linear arithmetic to logarithmic. What's the difference? Do we need to use logarithmic? What is logarithmic? With a logarithmic scale, smaller values take more space in the region as compared with higher values. Why would you want to do that? Because it gives you a clear view of a graph when there's a large percentage increase in prices over a period of time. So on a bigger time scale, this really is pronounced. A log scale evenly spaces price in percentage terms. So what does that mean? It means that your chart spacing between $10 and $20 has the exact same space as the increment between $20 and $40. Why? Because it represents the same percentage increase. So the question is, which one of these two should we be using? Arithmetic or logarithmic? To answer this question, I'd like to quote the famous GAN practitioner Connie Brown, and this is what she had to say about logarithmic scaling. The Fibonacci confluence zones are subsets within a harmonic proportional series. Harmonic ratios are derived from prime numbers raised to an exponential number, and therefore they become logarithmic. For that reason, I do not want to ever use a log scale within my price axis, distorting the raw data. So the short answer, do we want to use arithmetic or logarithmic? The short answer, arithmetic. Based on the statement here, which I agree with, that the geometric techniques that we use are logarithmic in themselves. Therefore, we don't want to use distorted data, as Connie mentions. With our arithmetic scaling, it's also possible to alter the vertical compression of the chart by adjusting the price scale. You can do this with most software packages. In this case, I'll show you what we do with Market Analyst. If you have a mouse with a scroll wheel on it, if you just select or click on the price scale and move your scroll wheel forward, what this does, it expands the price scale. Or if you roll the wheel backwards, this compresses the price scale. If you want it to go back, simply go up to the little padlock here and click it. Now that we've dealt with the price scale, let's move on to the time scale. So for our time scale, there's 3 settings that we can choose from. Number 1, trading days. Number 2, calendar days. Or number 3, solar degrees. As mentioned in the Gartley Trading Method book, we're going to use calendar days, and this is how we select calendar days in Market Analyst. By default, most charts will open based on trading days on the time scale. So to change that, go over here under Properties and select your price data here. And go over here to Filters, and you see it says Calendar Days there. Just click Calendar Days, and boom, there it is. So that's it. We have our charts organized on the y-axis or price scale. We have this set to arithmetic scaling. And over here on the x-axis, we have our time set out as calendar days versus trading days. I'm now going to use TradeStation to show you an example of one of the problems of trying to apply geometric tools to a chart. So what I'm going to do here is draw a simple circle. All right, so that looks like a circle, right? Okay, now we're going to change the time scaling here. Decreasing the bar spacing, and oh my goodness, look at this circle is now an ellipse. Or if you go the other way, it starts to stretch it out this way. A bit of a problem with our geometric tools that we can apply to the chart. So this is one of the reasons that we're interested in the time and the price scaling. So what can we do to resolve this issue of squishing our circle into an ellipse? To stop this from happening, we need to lock the time to the price scale. We have to create a relationship between the two of them. We lock them together based on a certain ratio. We need to create X and Y constant relationship scaling. It maintains a constant relationship between the right side of the scale, the price, and the time. So what does this look like? So I'm going to draw a circle here. All right, now we go over here to the bottom right corner, and you notice the number here, 0.649. That means for this is a daily chart, for every day of time, there is a relationship of 64.9 cents on the price scale. Now, if that's the number you want to use, you can hit the price ratio lock. You click that and see how it's highlighted now. Now I can increase the bar or decrease the bar spacing here. And you notice how the circle does not change. I can even go down here and plug in a specific number. Maybe I want to see what the chart looks like if I set this up to be $1 of price to $1 of time. And that's what that scaling looks like. Now it's all locked up. And Gann was a big fan of $1 per day or 10 cents per day. To unlock the price time ratio, we just click it again there and we're back to normal. I selected a number down here. I plugged in 1. You can put whatever number that you want in there. So the question is, which ratio is the best for us to use for our time and price lock? W.D. Gann would use static ratios based on multiples or fractions of 10 on different time frames, and really left it up to the individual to make the choice. But rather than applying a single rule to a whole data set, it's really better to find a ratio that fits the psychology of the most current group of traders. Now, in Gann's day, markets were much easier to predict. Why? Because now we have algorithmic trading. We have high frequency trading. all kinds of different strategies that weren't around in Gann's day. Markets have now become more complex and more unpredictable. So in today's markets, how can we find a ratio that fits the psychology of the most current group of traders? You've heard me say it before, and you're going to hear me say it again. It's our goal really to simply identify the completion of the D point. So we need to consider the most recent time and price relationships. For an example, when we look at a Gartley pattern, the best data sample that we can consider to determine the optimum time and price relationship is the trend move, the XA leg. Do you remember when we applied the tetrad of the Beck's emblem? We did that to the XA leg. I'm just going to show you a bullish 52 here on the S&P. And so what we're going to do is put the Beck's emblem on the trend move. As mentioned, the trend move gives us an indication of what the optimum time and price lock should be. So here's the X point, here's the A point, and now we're looking at this 90-degree angle that comes down this way, right? We can see that this correction is sticking on the outside of that. So now we need to get this high here under this 90-degree angle. So to do that, what you can do is go over here to the history slider and move this back and forth. Okay, so as we move this history slider, we know we're changing the time and the price scaling. This number down here is going to change in the bottom right corner based on that. And once it's inside that angle, that 90-degree angle, I can hit the lock. Now it's all locked up, and I can add and subtract bars all day long, and that constant relationship is there. See that? That's what we're looking for. Now, you're probably wanting me to put a quad on here on the correction, and we'll do that as well. Click here, and you got to click this magnet, turn that off when you're doing the D point because it snaps sometimes and you don't want it to do that. So to get precise, you turn that off on the last point like that. Okay, so the tip of the quad, notice that's closest to the 52 angle. That's what you want. That's giving us a great bullish setup here. So to review, what we want to do is lock our time and price ratio based on the 90-degree angle at point A. So here's our XA leg. We draw the tetrad, that gives us the 90-degree angle. Just make sure that our correction stays within that 90 degrees. Here we have our quadrilateral, and the C point, make sure that that lines up with that 90-degree angle at A. Let's look at a few examples. So here's a chart of the Australian dollar. It looks like we got an X, A, B, C, D. So let's apply the quad first. A, B, and we're going to turn off the lock over here to drop this right about there. Okay, now let's do the Beck's emblem. And we'll turn the lock back on. X, A. Okay, and so what we're wanting to do here is, here's your C. It's not lining up exactly with the tetrad here, so let's change the scaling. We can do it down here by plugging in a number, but the easiest way is with this history slider. So you can just grab either end of the history slider and move it, and you'll notice, watch the quad move inside the tetrad right about there. Okay, and once you have that, then we can go over here and lock up the chart, and then you can go ahead and move it any way that you want, and it's not going to change the time and the price scaling. All right, let's look at another one here. So looks like we got an X, A, B, C. We'll have to do maybe an alternate quad on this. Looking for a D point here. So let's do the quad. A, B, turn off the lock. And we'll put it right about there. That looks good. Now let's go to the Bex emblem. X, turn the lock on. X, A, oops. There we go. A, and once again the C point is not lining up with the tetrad, so we're going to move our history slider back and forth. Takes a little bit of finesse to get used to this. And there we go. Okay. And then we'll go over here and lock it. Lock. Now we can move this any way we want. Okay, let's do another one. Let's apply the quad here. Turn off the lock. All right. Now the emblem. Turn the lock on. X, A, and move the history slider. Lock. Okay, so that would be a bullish 38 here. Just want to give you another example of something else besides the 52. I like the 52s. I wanted to include this one. You can see it bounces right off that low there. Tip of the quad touches it exactly. It's a nice trade setup. So depending on if it's in your trading plan, whether or not you want to do 38s or just 52s, it's up to you. Let's look at another one here. Australian dollar. Let's do our quad. A, B, and turn the lock off. There's your C point and our projected D here. We do the emblem. Turn the lock back on for that. X, A. We almost got the scaling right here, but let's move it a little bit. Close enough, right? Where is it? That looks good. Lock it up, and we're good to go. Bullish 52 right there. Here's another one. Probably starting to notice X, A, B, C, D down here. Let's do the quad first. A, B, turn the lock off. And we're going to do a bit of an alternate here. Do something like that. And the emblem, turn the lock on. Okay, now we adjust our scaling here, move it back and forth until it's right inside there, we got that 90-degree angle here, C points here. Tip of the quad is pointing at 52. This is your signal to buy here. Even though it went down and made a new low, you would have made money on this leg right up here. Okay, at this point you can hit the lock, and now we can add more data. It's not going to change the shape of what we've got on our screen because our time and our price is locked. Okay, let's look at one more, Microsoft. Let's do the quad. A, B, turn off the lock. We'll go C right here. There we go. Notice how I drag the tip of the quad so it lines up over here. And now we're going to do Beck's emblem. X, turn the lock on, X to A. Okay, just about good with the scaling here. However, that side of the quad needs to line up nicely with that tetrad, so we're going to move this history slider here a little bit, like that. There we go. Lock it up, bottom right corner. And there you go. This would be definitely one of those trend reversal Gartley's TRGs as it was coming down. That was a significant low. Retest the low, a bullish 52 right here. So let's review what we've covered off in this session. We looked at arithmetic scaling and logarithmic scaling on the price, and we're choosing to use arithmetic scaling. Also on the time, we're going to use calendar versus trading days based on the discussion on this topic in the Gartley Trading Method book. If we're going to use geometry on our chart with computers, we need to lock the time and the price ratio. Remember, we opened up TradeStation and we squished that circle into an ellipse because we were putting more bars onto the screen. We want to stop that from happening. So what we need to do is lock the time and the price ratio. This wasn't an issue back in Gann's day because he used paper charts, but with computers it's an issue. When we use a time and price ratio, which ratio is best to use? We looked at the emblem and the quadrilateral, and we scaled the chart based on a 90-degree angle at the A point. We compare the XA leg and we compare that AC leg, and we use the tetrad inside the emblem and the quadrilateral together to determine this ratio. When we've locked up our charts, then it's just simply a matter of identifying which angle of the emblem that the tip of the quad is closest to, and that's going to tell you which angle to trade off of. My personal preference, the 52 angle. If the tip is closest to the 52, then the trade setup is complete when the market touches the 52-degree angle. This session completes the instruction for our core trade setup. We'll now look at a number of different geometric filters that we can add to our core trade setup. It's recommended that you test each filter individually after watching the corresponding lesson to determine if there's a place for it in your personal trading toolbox. It's important that you have a high level of confidence in the filters that you choose for your personal trading strategy. With that being said, let's now move on to our first filter, the ZBD.